Hello everybody, this is AK. I'm back. Okay, I think I had a bit too much to eat just now for lunch. Feeling a bit sleepy, but I told myself I should do this recording because if I put it off, I probably won't do it. Yeah, it's like that, sometimes, it's just like doing housework. I feel like I want to do housework, I better do it because if I don't do it, I might not do it for many, many days after that, right? So today we have quite a few things to talk about, quite a few things. I have things to say. But before we start, I have seen some feedback on how there are YouTube advertisements in my video, right? I enabled YouTube ads and I allow them to place ads automatically because apparently if I disable the ads, then YouTube doesn't promote my videos as much, right? Because I suppose they don't get to make any money, right? If I disable the ads. If you don't like the ads, just skip them, right? I think the ads, most of them allow us to skip after just 5 seconds. Personally, that's what I do too when I watch YouTube videos, and I just skip the ads after 5 seconds, right? So I hope you are not too bothered by the ads. Just skip them, okay, if you don't like them. But if you don't skip them and you watch them because they are relevant to you, or if you just leave the video running while you're doing some other work at home and listening to AK talk to himself, thank you very much, because those ads generate a few dollars for me per video. So think of it as buying AK a cup of tea and a snack, right? I mean, after all, my videos, I don't have any sponsors. There's no sponsored content from Webull or from some crypto people or from some property agents or whatever. My ads have no sponsorship. So these ads make some pocket money for me if you do watch them, right? So now let's move on to the topic proper, right? On the screen, you see economic downturn coming. Be prepared, right? I published a blog post earlier this morning on the topic of how 68% of Singapore consumers are feeling pessimistic and they think that an economic downturn is coming. But of course, according to PM Lee, it's not happening this year, right? But it could well happen next year. Whatever the case, I think we should be prepared. So the blog post is about this, and it's also about another topic, point number 2 on screen, which is how a TikToker kena POFMA, right? Because he said things about the election system in Singapore being basically that our votes are not secret and that they can be traced, and that doesn't bother me too much because I'm not into politics. But I'm more bothered by the second thing he said, which was something about CPF, which was totally untrue. And CPF is something I blog a lot about, and also I talk about it in my YouTube channel, of course, and how lucky we are to be CPF members and how lucky we are to have the system, right? Because it's really helpful, especially to the lower income people. They really need this help, and the returns are very decent. And it's very strange because it's usually the people who don't have a lot of money in their CPF who make the most noise and are most unhappy about the CPF, right? And they want their money back from CPF, every single cent, because they don't have enough money. I think that's the wrong approach. It's just like saying that I have only one chicken at home and it's only laying 1 egg for me per day, and 1 egg for me a day is not enough. So I will kill the chicken and eat the chicken, and then of course after that you have no more eggs, You don't even get 1 egg per day after that because the chicken is gone, right? The right thing to do is to think of how to have more than one chicken so that you have more than 1 egg per day, right? So anyway, points number 1 and 2, if you are interested to know more about what I think, and they are in my blog that I published this morning. I'll leave a link in the description below. Okay, point number 3 about YouTube ads. I talked about it just now already. Like I say, if you don't like the ads, just skip them. Personally, I don't like them very much, but I think it's a necessary evil so that my videos reach more people, right? And let's move on to point number 4, 5, and 6, which are about IREIT Global, Wilmar International, and about prices and value. Even though I keep talking about how, as investors for income, we want to focus on income and not so much on prices. Like I mean, like in the past video, I said people will still be affected by prices, right? And usually they're very happy, and I usually don't hear from them when prices are going up, right? But when prices go down, usually I will hear from some of them, and they'll be worried. Oh, what happened? Prices are going down. You know, it's just like when ComfortDelGro, I say I bought at 115, and there were some readers of my blog who went in and bought at 115, 114, 113 after I said I bought at 115. And of course, you know, for a while, ComfortDelGro's price went down to almost $1, I think 103 or something, and some readers got worried and a bit upset and say, oh no, it's dropped to almost $1 now, then what should I do? You know, people will still get affected, despite the fact that I've said I'm not worried, you know, but they are worried, which is why I say don't just follow social media influencers, or don't just follow anyone into buying anything, especially if you do not know the value of that something that you are buying, because this will happen, right? Do your own due diligence. You might get an idea from listening to somebody, but do your own due diligence, do your own research, teach yourself how to value businesses, and then decide for yourself if that person makes any sense. I mean, I started watching YouTube videos a bit more often about investments, and sometimes some of the things that social media influencers, YouTubers say just don't make sense to me, you know, and sometimes what they say would intrigue me, and I might go and find out more about what they've said and whether it could be an opportunity. But don't just follow blindly, okay? So now that, of course, ComfortDelGro's share price has gone back up, I don't hear any complaints anymore, right? It's like this, right? It's the same thing with IREIT Global. The unit price has gone down, right? And some people are worried that it could be another distressed REIT like Manulife US REIT, for example. I mean, the share price going down suggests that it could be in distress, but fundamentally the business is not in distress, right? There's a disconnect, and in such disconnects we find opportunities, right? That's what I think. You don't have to agree with me, right? Don't rush in to buy IREIT Global just because I've said that. You do your own research, and you have to satisfy yourself that it is a good investment, good value for money, right? That's for you to decide, right? So like I said before, when we invest in REITs, we want to make sure they have strong balance sheets, especially in the current environment. And I've also said that IREIT Global's gearing ratio would be around 34%, even after they acquire the out-of-town retail parks, which are leased on a long term to B&M, a discounter, a discount retailer, right, which is very big in the UK and in France. They are worth, I think, $4 billion dollars or $5 billion. I cannot remember exactly. Okay. So even if the value of IREIT's properties, the entire property portfolio, were to decline by 15%, like what happened to Manulife US REIT, we will not see its gearing ratio exceeding 50%. No way. It wouldn't even exceed 45%. It might not even exceed 40%, right? So that gives me peace of mind. Their balance sheet is very strong. Balance sheet strength cannot be overemphasized. So always remember what Warren Buffett said. Price is what we pay. Value is what we get. Right? So if you're worried, if someone's worried about IREIT Global's income distribution declining, and how we're getting paid less this month, you have to drill into the details, right? They sign new tenants, right? And their portfolio occupancy increased to 88.7%, and their Darmstadt property in Germany is currently only 25% occupied. There's still 75% to be filled, and they have prospective tenants they are still negotiating with. And if they were to sign new tenants for that property, that will bump up the income. There's also the fact that they have rent-free periods for newly signed leases in a few properties. There's the Bonn campus, the Munster campus, and also the Sant Cugat Green property in Spain. So they have new leases which have been signed, but they are rent-free periods. I mean, the rent-free periods is a common practice even in other REITs with properties in Singapore. Like, for example, if you were to rent a shop in a mall, the landlord might give you a 1 month or 2 month rent-free period, depending on how big your space is, for you to do renovation and the fitting before you can start your business. So, like, I think Dong Dong Kee took a very big space in Jewel at Changi Airport, and so that big space they needed like probably 2 months to do renovation, and for that 2 months, obviously it's not fair to charge them any rental. Usually the customer would say, oh, I need a couple of months to do some renovation, and the landlord will say, okay, fine, because you are not having any income, right? So the rent-free periods for newly signed leases in 3 properties for IREIT Global, that you will see the income coming in later on in the year, right? So you can imagine, even though the income is lower now, for the rest of the year, when the rent-free periods are up, and when Darmstadt property gradually gets filled, income would bump up. So any pessimism now, if the unit price for IREIT Global should be pushed down any further, because they, in response to the lower income that is being collected, that's being distributed right now, it's very short-sighted, and it could be an opportunity. So personally, I'm waiting, and if the price should go down very much lower, so that it tests the lows touched during the pandemic, I would probably buy a bit more, or much more, depending on the health of my war chest at that time. There's also one thing I want to touch upon, and that's their Berlin property. Their Berlin property, I've said, from my research, I found out that it's under rented. Basically, that means that the rent that they're getting is below the market rate, right? Even in today's market, where you say, the rents for properties, for commercial, for offices, they're coming down in US and Europe, more in US than Europe actually. They are still under rented, right? And in fact, they extended the lease for the Berlin property by 6 months at something like 30 plus, almost 40% higher than their existing rent. That's a lot. That's a big increase. And it confirms that property is under rented, which also points to the possibility that the property is undervalued, right? That the carrying value in their books might be too low. Okay, so back to the same thing that Warren Buffett said before about price being what we pay and value being what we get. So as long as we feel we're getting value for money, and at the current price, I think it is value for money. But of course, it could could get cheaper. And if it goes cheaper, that means we're getting even more value for money, right? And that's IREIT Global. And along the same line, now we talk about Wilmar International. Same thing for Wilmar International. People are worried because share price have dropped. And it's in response to Wilmar's recent results, which show that their profit drop and their revenue drop. But this is not uncommon for Wilmar. Sometimes it goes up, sometimes it goes down. But if we look at the business fundamentals and the long-term prospects and how they have done, how their track record, we wouldn't be that worried anymore. In fact, we wouldn't worry anymore, right? For me, when it comes to Wilmar, right, I like to see what the insiders doing. That's number one. And number two, I like to see what is actually worth when we look at the parts, right? Or using a sum of parts valuation technique, right? And Wilmar International's chairman and CEO, Kwok Kun Hong, has been constantly increasing his stake in the company. And recently he bought more, right? Like almost 9 million shares of Wilmar over a few months at an average price of $3.64 per share. $3.64 per share. And the total acquisition cost was almost $33 million, right? And insiders, Peter Lynch will tell you, insiders buy for only one reason, and that's when they think that it's cheap, it's undervalued, and they're going to make money out of it, right? And the thing about Wilmar is that it's like a conglomerate. It has its fingers in many pots of honey, right? And the thing with conglomerates is usually they have a conglomerate discount, right? It's the same thing with Berkshire, which is run by Warren Buffett, of course, that we know. And you see Buffett will buy shares of Berkshire from time to time, right? Share buybacks, because he thinks that it's cheap, it's undervalued, right? It's the same thing with Wilmar. And if we think of the numbers, we look at the numbers, right? And we'll see how irrational Mr. Market can be, right? Today, Wilmar is a more valuable company than it was in the year 2010, for example, right? And its NAV, net asset value, is much higher today than it was in 2010. However, in 2010, it was trading at a price that was as high as $7.11 per share. $7.11 per share. And look at what is Wilmar's share price today, right? And people wonder why Mr. Kwok would buy at $3.64 a share. An average price was $3.64 a share, right? So you see, people can be irrational, overly optimistic. $7.11 a share back in 2010, and now the business is worth a lot more, and they are not even willing to pay $3.60 a share, right? So that's market sentiment for you, right? And if we are to look at the numbers, at the facts a bit more, because that's what we're interested in as serious investors. Wilmar still holds a 90% stake in its Chinese subsidiary, the Carry Arawana Holdings, or YKA. And YKA has a market cap that is much bigger than Wilmar's market cap in Singapore. YKA has a market cap that is much bigger than the Wilmar's market cap in Singapore. And Wilmar still holds a 90% stake in YKA. Let that sink in for a while, right? So I won't even talk about their 50% joint venture in India, the Adani Wilmar Limited, right? Which when it public listed, the share price went up quite a bit, right? So if you do the sum of parts, right, Wilmar is definitely undervalued, very, very undervalued. And Wilmar could easily unlock more value for shareholders by reducing its stakes in these businesses. Just by doing that, they don't have to do very much else, right? And so what's not to like? What's there to worry about? I don't understand why people are worried and why people would ask me, hey, the share price is dropping, and you know, that kind of thing lah. But we have to understand that undervalued can remain undervalued for a long time, right? But I don't mind because I'm okay to wait as long as being paid, right? As long as I'm being paid to wait, I'm fine, right? And basically, if we invest in Wilmar today or at even lower prices, we're actually getting a big a share of very good income producing businesses. And some of them we're getting for free, right? Wilmar is still a profitable business. And not only that, as an investor for income, I like the fact that they pay dividends during good and bad times. They do not suspend dividend payout during bad times, right? So they are, in my mind, they are also shareholder friendly. And if you have watched my earlier video on what kind of income producing businesses I would invest in, I talk about this being an important point, shareholder friendly. Okay, I think that about does it for this video. Okay, so to the next video, take care of yourself. Remember, if AK can do it, so can you. Bye bye.